The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition and an awesome edition of the Power Trading Hour with me, your humble, lovable, squeezably soft teddy bear, no, koala bear of Wall Street. Nice and soft and fuzzy. We have a market here that is up a little bit from yesterday's pullback. Up 7 points on the S&P cash off of being down 12 points yesterday. I suspect that we're going to kind of bounce around and pull back into a probably around that 1938 level. And why we may have a little respite today, I could see that happening maybe and bouncing off Friday. Of course, we're going to go into a shortened week next week and with a little bit of fun buying. And at that point, I could see maybe they could try to drive this back up once again to the highs. But yesterday did have a lot of people scratching their heads. I think everybody does know that there are problems in the world, and they are going to affect the stock market. Of course, we found out today that most of the data that we saw over the last few months wasn't just what can I say? Just the weather-related issues. In fact, it was mostly almost all health-related issues in the GDP numbers. We'll talk about that in a few minutes. 1.9 billion shares as we start the show. So volume a little bit better today. But I suspect that we've at least got a little notice that there isn't the kind of incredible buying that everybody must just hop in no matter what. It's we did pull back up here a little bit today and saw some of the stocks kind of bounce out this morning. Found people that just had to buy them today. But my guess is that there's not that many left out here. Each time they've bought over the last few times, the rewards get smaller and smaller and smaller. And, of course, the volume gets lower and lower and lower. So we'll be looking at it. I think we're awful close to having a big-time top. But that probably, as I've said before, we could stumble around in this range until we get back up get to the 4th of July weekend. And at that point, it's going to be a real decision to see whether this incredibly, extremely light volume can hold a market up through the rest of the summer. I really just don't see a whole lot of energy to actually push that. I thought maybe we'd get up to 2,000 on the S&P cash, but boy, I tell you what, it looks like if just testing the previous high again would be an effort for this market, at least over the last few days. So we'll talk about that. In 1974, Texas Instruments and three of its key engineers end up with patents for their handheld aluminum calculator. The gizmo is 1 3/4 inches thick and weighs 2 pounds, 13 ounces. You can add, subtract, multiply, and divide, and will sell between $84.95 and $120. I think it actually went for sale several years before the patent came out. I think 71 or 72. I can remember buying a Bomar Brain. This is kind of close to what I had, which was my first calculator, and I think the thing was $50 or $60. Had a few more buttons on it. But it was noticeably cheaper than the Texas Instrument product. So we'll keep an eye on it. But I don't know. But at least it was a good one. And, of course, learn to make all the nasty words on it when you hold it upside down, type and make characters on it. But the first real product with LED displays in it, the Pixie displays had gone the way of NASA in the 60s in the space race. We've gone on to LEDs, which reminds me, there was a great watch out just about the same time with LEDs in it. The thing was like, whatever it was, it must have been $1,000 because I remember looking at it every time I went by the jewelry store in the mall. and it was like a quasar watch or something like that. The first one that really had that LED space-looking front, and it was one I wanted all the time to. Never ended up with it. On this day in 1876, also, Native American forces led by Chief Crazy Horse and Sitting Bull defeat the U.S. Army troops of Lieutenant Colonel George Armstrong Custer in a bloody battle near the southern Montana's Little Bighorn. And it is one of those days that you just have to always remember, if you've got 600 people and they've got 2,500 people, you're probably going to lose. And that's pretty much what happened. We continue with the Russell rebalance. Yesterday, I said we don't want to put too much effort into what happened yesterday. Part of that was the end of options rollover. We also had an issue with the Russell rebalance. There are going to be people in some of these stocks trying to duplicate the Russell over the next few days. And of course, this goes into the June 30th final press of the actual Russell components. But for the most part, you can probably, if you were a smart fund manager, probably figure out fairly close to a tenth of what the positions you're going to need in that Russell rebalance is if you're trying to duplicate it. But I don't know if we can put too much into this, but just remember, of course, I believe on Friday, we will be seeing, is that Friday? Monday, yeah, Friday. I think it actually opens on the 30th with the rebalanced and the final membership posted on Monday. So, well, we may still have a few of these stocks kind of being pushed around. Again, any of the stocks that had been doing incredibly well, probably getting a smaller cut in the Russell indexes. Any of the stocks that haven't done so well, probably being bought a little bit as they rebalance a lot of the portfolio out there. We will have a change on June 30th also, and that is the Affiliated Managers Group, AMG, is coming to join the S&P 500, replacing Forest Labs, which is being acquired. Change is expected to take place after the close of June 30th, which, of course, will be Monday. Affiliated Managers Group operates as an asset management company, providing investment management services to mutual funds, institutional clients, and high net worth individuals in the United States. If you haven't heard of them, AMG is their symbol. Of course, we've been talking a little bit about how Arrow's Supreme Court decision would affect the market. We saw CBS is up 5% today. Didn't go well for Arrow. And it has sent a chilling effect over what is Silicon Valley. The reason why is that most people thought that there was more than a decent chance that Arrow, more than a 50-50 chance Arrow would make it through. That's why CBS bounced as 5%. If it only bounced 1%, then I would believe that the people that said they knew it all along, which a bunch of people came out today, oh, I knew it all along. Never heard them say that before today. And they ask them, and it's always been, well, you never know. I thought it didn't look very good for them in the argument phase, but what we do now know from the documents that came out, Arrow is a company that basically made a digital disc recorder. It recorded live television off the public airwaves, and the argument was that Arrow was violating the copyrights of these on-air licensed by the by the FCC television stations, and kind of a tough argument. Of course, lawyers are going to always argue about how many angels can fit on the head of a pin, but when you look through the documents out there, first of all, it doesn't apply to anything else. They put a big, giant stamp at the beginning of the decision that basically said, this only has to do with these guys, doesn't have to do with anything else, never was a big deal. Of course, Arrow was saying all we're debating now is how long your antenna can be. Well, since Arrow was actually making money from it, the Supreme Court decided that it was a public performance, i.e. that you were displaying it and making money off of it. It did come in as a public performance. And that's probably the best case that the broadcasters have. They do not own the public airwaves. And rebroadcasting of the signal, if you display the Super Bowl in your bar, they're going to come in and ask for cash as a public performance. So basically they came up with, yes, the airwaves are free. If anybody makes a dime off of it, then you have to pay copyrights, or you're going to have to pay some money to those broadcasters for their content. I think this probably ends Arrow as a company, at least in any kind of thing that they want to do now. The question is whether or not they can go after and be a company like Slingbox and make the kind of money that they need to. $8 a month, $9 a month. It may not be enough for what the broadcasters want to charge them. The local cable companies normally get charged out the yin-yang for this kind of stuff. It's a huge amount of cash to broadcasters like CBS, NBC, ABC. And that is it. But pretty much Arrow down for the count. They sent out some tweets right after it saying that they're pretty much over. Then they sent some out that said, well, maybe we're not over. The idea is whether or not they could ever make any money if they have to actually pay for the content. And it may be problematic, but unknown whether they're truly just mostly dead or totally dead. But we'll find out here in the next few days or so.
I know to you I may look old. Hope this statement ain't too bold, but here comes the judge. Here comes the judge. Here comes the judge. Here comes the judge. Here comes the judge.
Well, here comes the judge. One of the things that they did rule on, hey, at the same time, yes, from old Laugh-In, here comes the judge. The Supreme Court unanimously ruled Wednesday, and this is the first unanimous ruling they've had, I think, in 5 or 10 years. I forgot what they said. There haven't been many unanimous rulings out here that police generally may not search cell phones of arrested individuals without first obtaining a search warrant. The idea is that it's not something out in plain sight. You have to literally search through it. It would be the equivalent of starting to cut up somebody's car because something might be inside of it. If you've got to have some kind of probable cause and you need to get a search warrant, and of course they haven't, and there are a ton of these cases which are now probably going to get appealed. What it does tell us, though, is we're slowly starting to get back some of our civil rights that were ferreted away by those that believe that they always know better. So some good news on this day. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Up 8.5 points on the S&P cash now, just over 2 billion shares. And so we're seeing a little bit of pullback here today. And, of course, no dip cannot be bought, and we're going to get into that in a second. Yesterday, Solar City's CEO was on TV, actually on cable yesterday, saying how much better their systems will be with batteries. And I'm going to call male bovine on this. And one of the reasons why is these guys continue to wander off into the desert, probably the sun's a little bit too bright on their skulls, and they continue to just like ignore the cost of lithium-ion batteries. And it's just like everything's magic. If it's solar, it's got to be good. It doesn't matter what the cost is. Doesn't matter what the cost is to the government. It's solar, so therefore it must be good. My argument will always be economic, and that is if it's 4 times the cost of generating electricity right now with natural gas, what is it going to be with lithium ion? I can put a guess, but if you start putting batteries on it so you can use the solar power later at night, those batteries are going to last about 3, 4, 5 years. Just batteries enough to run a car are about $20,000, $25,000 worth of a Tesla. So let's say you put in $25,000 worth of batteries into a house. You can use probably more power all day long using your air conditioner, everything else. Maybe they don't use that much. Let's say that you use $15,000 or $10,000 worth of lithium-ion batteries. Of course, you're going to need all kinds of equipment to hook that lithium-ion batteries back into the solar cells and make sure they're conditioned and everything else. So the solar cell is probably going to last about 4.5 years. Okay? Another 10 grand, of course, to replace those solar cells. Of course, they're going to work at about 100% efficiency for about the first year. They're going to start falling off. As you get into about the third year, they'll be about 75% efficient. By the fourth, fifth year, they'll be about 50%. Hopefully, they don't all fail at once, but maybe they can, maybe they can't, maybe they won't. But again, 10 grand over 5 years is an awful lot of cash when you've got an extremely inexpensive way of getting electricity. And since the current administration hates coal, we can use natural gas. But to me, the whole idea of spending 3, 4, 5 times the cost of natural gas to feel good, it gives you an idea of what's going to happen unless they finally come up with a solar cell that is inexpensive and lasts a while. And without doing that, a lot of these things are all feel-good kind of technologies. Some early adopters will buy it. There's going to be a tipping point eventually, one day, where they actually do become economically viable. And that's the day that I'll be in there looking at them or close to it or looking ahead to when they will. But they aren't. The only way that you can afford them now is basically no interest loans from the government, huge subsidies from the government, and have your neighbor pay, because any solar power you put on the grid, you get paid 2 or 3 times what it costs to actually generate it from natural gas. So basically you're taxing all your neighbors to feel good. I just, every time I've ever seen one of these kind of technologies that is the promise of the future, I've always seen it end with more and more kinds of things like solar water heaters on the top of people's houses 30 years later that haven't been hooked up for 28. But, it's interesting. But I will warn you now, Solar City and a lot of the other solar stocks, George Soros's warning, all of economic history is one lie and deceit after another. Your job as a speculator is to get on when the lie is being propagated and then get off before it's discovered. I would say to you on the Solar City channel and bandwagon, just make sure you get off before this thing blows up, because unless they come out with a way to truly make it as cheap as natural gas, it is ridiculous. And what's up with energy? I don't know. Over the last week, in fact, Wednesday, we're going to go back and look at some more of these charts. I could not figure out for the life of me why all of them were screaming that there were going to be problems in the energy sector, but I couldn't figure out exactly what was going on. Today we did find out, and that is that they are going to be changing the requirements for how much oil can be exported. And as we export oil, it will probably be, of course, refined in a foreign country and then come back to us. And that's what's hurting these stocks today. We'll get into it when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
So, what are we doing actually here? And my guess is that with the new rules that allow us to export oil, we're going to export that oil probably to Mexico, where they'll build refineries and take the jobs there and probably ship us back the gasoline. So I'm not exactly sure why everybody would want to do this, other than the fact that it seems like just in the last few weeks we've got a kind of like those dolphins that just want to swim up on the beach and die. It just seems like we're doing everything we can to tear down this country in the last few weeks with either lack of action or overtly avoiding laws, especially the Constitution. Probably why I was so happy today when we saw that at least we got some of our rights back with cell phone searches. We talked about this I'm pretty sure this show was last Wednesday, and we were going through all those charts in energy. And one thing I could not put together was that it was all about the refiners. We've got several out there. In fact, let me go back through my list here. VLO early was off at 10%. Of course, natural resources, PXD, PD, MPC, and PSX. Well, I'll go through those. But all the refiners are just absolutely getting smacked. Of course, kind of funny with the whole idea of looking at crude up 44 cents, that there was such a huge change in these refineries. But I think what it is going to do is move these refineries to Mexico, and the crack spread's probably going to come down, and probably why you see such a move like in VLO at that 10% level. So we'll look through those in a minute. But I did not put a position in here because I knew that it looked like there was going to be some kind of move. But I just didn't like it because I didn't understand it. And I knew that there was something going on here, but it didn't really make sense to me. I stayed out of it. We looked at a lot of these things, including the XLE. I just couldn't see that there was enough risk-reward in it for me yet. I think that day is coming, and it may be right after the 4th of July or something like that. But I think we're going to have another bite at the apple on a lot of these stocks that blew up. So there's always another bus coming along, and there's always another ABC on the way down. Of course, market was down a lot lower earlier in the morning, and that was because we found the GDP numbers blowing chunks all over the sidewalk. Probably, I don't know where everybody has in their area of the country, but there's nothing. It was for us getting out of high school, being young. It was always Mad Dog 2020. It was a fortified wine that it was either grape or orange, and it might as well have electricity running through it as it was neon color. And of course, nothing like a bunch of people that of that age that can't hold their liquor to be putting all that bright bluish, purplish, or orange wine back on the pavements when you drank too much of it. But anyway, you just can't get by this, and everybody's kind of whistling past the graveyard today on the basically seeing the GDP fall at a 2.9% annual rate instead of the 1% that had been reported last month. And that probably tells you that we're going to have not QE, but at least low interest rates ad nauseum, and probably why we see the markets up today. And that is that the markets are fine as long as they have that IV drip of zero interest rates. And the correct thing to do would probably be to raise those rates now. And I think you have a solid case now for why gold could rally all the way back up and maybe into the 2,400 range. That is the not the inability for the Fed to actually start raising those rates and seeing any pain. I still think that as soon as the elections are over, we're probably going to have it. But I have a feeling that inflation will take hold before then, or it's going to go too far down the line. They need to be raising those interest rates now. So I think there's probably a good case for that whole issue with and seeing inflation in the marketplace. The only thing that's troubling to me in all that is that the dollar still is not rallying like I thought it might. $80.24 on the dollar index today, off another 15 cents. I thought we'd be through about 81 on the dollar index today, and no such luck. Anyway, we're going to get more into charts here. One last thing, and then we're going to get into charts. I may not even get into charts if I talk about this too long. I'm pretty sure after the last couple of days that I have seen the future of the market. There's always some problem out there that is a systemic risk. Last time, of course, it was housing in 2007, subprime loans. Before then, it was, of course, the long-term capital management about blew the whole thing up in 98. In the early 90s, of course, it was the savings and loan debacle. There's always some risk to the system because people don't believe do believe that they can make money from nothing. There's a lot of books called Paving Wall Street and Inventing Money and all about the long-term capital fiasco. But there's basically the rules of finance are kind of like the rules of MC squared. They just because you don't like them doesn't mean they're going to change. And they're pretty much fixed, and they pretty much have been shown over the course of recorded history to be correct. We continue to see people think that they can outwit the market and outwit it. One of the reasons that I think that the market has a systemic risk that could blow up again, and I suspect we're going to be talking about this big in the next year. I brought it up a few times. Over the last few days, though, I'm feeling a lot more confident on this, and mostly it is because I think there's a absolute cadre, a cabal that is doing everything it can to keep volatility down in the markets. The reason why, if you get a volatile market, you're going to have to start selling stocks. That selling of stocks is going to make it even more volatile, which means you're going to have to sell even more stocks. In fact, I think that there could be a crash worse than the 1929 crash. I imagine the government will step in, so it probably won't be. But if left unattended, I think it would be even far worse. And that would be a move where it just never stopped. These funds, hedge funds, big street names, everybody in the world is just leveraged out the yin-yang, and that leverage only works, and they can only carry that leverage because of Dodd-Frank as long as these numbers stay low. If volatility comes up for any reason, and a lot of times the Fed can't control, we'll say a loose nuclear missile, another terrorist attack, there's going to be a lot of things that the Fed can't work at. And all it's going to take is one spark. Basically, the Fed is throwing gasoline everywhere and walking around with a candle in one hand and hoping that they don't drop it. And I think, like I said, I think within the next year, I think we're going to be hearing all about the whole value at risk and leverage issue. And the fact that I think that there's got these cabals know the only way that they can keep these stock markets up is to keep the volatility low so these funds can continue to increase the leverage up at these levels. But I think we're awful close to hitting these highs out here and not being able to sustain this any longer. Any system of any engineering will always hit a mathematical wall at some point. And right now, I think we're there. We see all kinds of instability, and within a day, it seems to be brushed under the rug without actually taking care of those systemic risks. They just build. It is the perpetual person that doesn't change the oil in their car and think that one day that it won't blow up on them. Anyway, that's just a thought, but I'm giving a warning out there, not that it's going to happen immediately, but I could see easily in next year seeing that we could have a market that was a feedback loop of selling that seemed like it could never stop unless they get rid of this value at risk model, encouraging higher leverage as the market goes higher. In fact, it should be just the different. It just should be just the opposite. As the market gets higher, they should encourage less margin, not more margin. That's the way it works in the option markets. When things get toasty, what do? They move the margin up. Guess what we're doing? When things move up, we move the margin down. What a mistake. At least in my opinion, one man's opinion. And we're going to go into some of these charts. Let's go back and see. I want to go back to last week. And I think that was is that the 23rd? It was Monday. So it's got to be what? About the 18th? Yeah. We looked at a lot of these, and some of these are getting repaired today. But when we were looking at the energy market, I was actually talking to Andy Heck on Monday, and I just couldn't put at least in my mind, couldn't put together what was going on. And now that we do know, it's a lot easier. But I haven't seen so many stocks in any sector all top out at the same time with light volume than we'd seen in energy stocks last Wednesday when we were talking about this. Anyway, fairly good indication of how price and volume works. We were looking at Comstock Resources last week. CRK is the symbol on this. The April 24th low is what we were looking at. $28.73, 2.3 million shares came into that, went above it. We've closed below it. And, of course, you had that huge candle down yesterday. But I would say that there's just about everything you need to know about a top being in. Now, it doesn't mean that we can't move at least back up toward that level. But if we break any on the way back down again, I think we really will have to watch over it. And again, that's a parabolic SAR, I think. We want to go to just a traditional moving average. We broke below that moving average, of course, yesterday. We're kind of moving back up, but what you would really want to watch for here in this whole energy sector is that we close back above something like the 9-day moving average, and then the next close below it, you'd want to be pulling the trigger big time on these without any volume. Almost all these charts have that same kind of look. But if you look at the huge losers today, these were the ones we were talking about last week. And it is, what do we have here? I think you can probably look a little bit better on this one. This one did roll over a little yesterday. Of course, we were talking about this one as it was going through the May 2nd high at $58.10 with 4.7 million shares. We saw 3.4 million shares on the 19th. On the 20th, 3.1 million shares, 2.1 million shares, and 2.3 on the way down yesterday. And, of course, today, the huge gap down. But any of these guys really around refining really took it on the chin. Now, we were looking at Simrax Energy, also XEC, as another one that had been giving some signals out here. And that was the May 7th high at 139.90, 3.8 million shares. Came into it on the 23rd, of course, with 1.9 million shares. Down yesterday, up today. Doesn't seem to be affecting quite, this one is quite as much as TSO, and we know the reason why. But a lot of these were acting in concert, and one of probably the biggest thing that you can look at is when all these charts start speaking with one mind that something is up. And that's why I covered them probably fairly significantly last week. I think there were a few other ones. Oh, I had a whole bunch of these things out here, didn't I? Okay, energy toppers. Hemrick in Payne was another one out here. These are all probably ones you want to look at over the next week. If these things cross back above this 9-day moving average and then close back below them, we're going to probably have some not only sell signals on just tests of the highs, but also better signals of continuing weakness in the sector. Anywhere, Hemrick and Payne, HP is the symbol on this, was going up against the April 24th high, $117, 3.1 million shares. We looked at it going through that high on June 20th with 2 million shares, so 1/3 off on volume. Closed back below it. It is on a sell signal on volume. If you could get a 9-day moving average penetration and then failure again, I think that's when you're really going to start seeing a lot of weakness in these. Total, TOT, I think we talked about this one also last week or maybe yesterday, day before, maybe Monday, was going up against the May 8th high, $73.52, 1.6 million shares. Going and down with heavy volume, 2 million shares, 2.3 million shares yesterday, a little less out here today. This one has not gone below that 9-day moving average, so probably less weak. We're going to look at TSO when we come back. Some of the others, you can always give me a call, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We've got a caller and talk to John in Philly. How you doing today, John?
David, I'm doing very well. Hope you're doing the same.
Absolutely.
I would tell you I'd like to get your opinion on a couple of things regarding TLT, that'd be the bond ETF. But before I ask you to proceed with that, just wanted to tell you thank you very much for highlighting the performance of energy stocks, specifically those refiners. And I just might share an item of which I'm familiar, only having studied this sector quite extensively. The refiners as a group, as you aptly pointed out, have staged large rallies in the past 6 months, past 18. And the catalyst, of course, as you mentioned, was relaxation of oil export regulations out of the U.S. What has been going on, David, in the refining business is this. There has been explosive supply growth, as you know, in shale oil, predominantly out of the state of Texas and out of North Dakota. And most of that oil coming out of those two areas is a very high-grade, light sweet mix of crude. And as a consequence, there's been a glut in a lot of those light grades. And that has depressed price of many barrels of USA crude, far below, actually, the WTI price that you see on the NYMEX traded contract. And in fact, there is an index, a cash index, that the industry uses called LLS. That's Louisiana Light Sweet. And what has been going on with refinery profits in the stocks has been very, very cheap oil, relatively speaking, being run through U.S. refineries. And since the refining business is strictly a volume and margin business, the margins have exploded as a great number of specifically Gulf Coast and East Coast refineries have had access to the very plentiful Texas and North Dakota oil shipped in by rail. So that's been a driver for the stocks rising. And this change out of D.C. is, frankly, in all reality, it's a marginal one. But it's a catalyst to get lots of players who are long these stocks having bought highs to sell out. So I just wanted to share that.
Okay. Now, you're talking about TLT. Of course, the 5-year bond auction didn't go all that well today, fairly marginal. What are you looking at in TLT here?
I am speculating a downtrend has already started or will start soon enough. My question to you is the power law vector indicator work on the daily and the weekly. Does that data tell you anything about whether or not TLT appears to be topping on a daily or weekly basis?
Well, you certainly had super strong energy back down to the low at June 19th. You could make a case that we have done our reversal. You did come down and gap down with a huge energy on the 2nd of June. That was, 11.7 million shares. And, of course, we're back into it. And if this volume's right with 4.5 million shares, you're just coming back up here and touching that gap. So you can make a good case this is an ABC down. Let's take a quick look at it. We're out of time today, but I'll do it I'll be in the den here for the next few minutes. So I will show this ABC down, but I think you can make a good case that May 29th is A, your B is June 29th, and your C is today. So we'll look at that in a minute. You bet. Thanks for the call.
Very much.
See you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.